Hi everyone, and welcome to today's More Report on Wednesday, the 5th of April, with me, Richard Perry, market analyst at Handset Markets. We've got a relatively quiet open, nothing really doing in terms of market direction. Forex market's basically flat on the day, although the cable trade has just jumped higher on the back of the better than expected UK services PMI, but broadly speaking, there's not a great deal of direction other than that. We can see that Treasury yields have just picked up higher slightly in the last sort of day or so, and that's helped to stabilise a bit of sentiment. There had been a bit of a safe haven bid that was going on in the market. That's started to lose its way a little bit. I'll talk you through the gold price and the yen trade in a bit, and that will help to sort of provide a bit of clarity in that. But certainly the 10-year Treasury yield holding up above 2.3% is important for markets generally. The dollar basically going sideways as it has done for the past few days. Nothing really doing there. VIX volatility has just dived back again. There had been a little bit of a spike higher, but that's sort of unwound as equities found a bit of support yesterday on Wall Street and again overnight, early morning today. FTSE's slightly higher, CAC slightly higher. DAX, different story potentially, a little bit of profit taking after a strong run higher, but yeah, just basically just biding time at the moment on these markets. In terms of economic data today, nothing. What am I saying? Nothing. The services PMIs have been out this morning, and they've been sort of beating expectations, really. Well, certainly the UK PMI that's just came out beat expectations, 55.0 up from 53.5 expected. But the Eurozone PMI came in mildly below expectation, but still strong, 56.4 on the composite, and that was that should help to that bit of soft data should hopefully sort of help to sort of feed into the improving outlook that you've got in the Eurozone data in recent months. The US non-manufacturing PMI this afternoon, 57.0. That is sort of continuing the strong numbers that we've had in recent months in the US, certainly since Donald Trump has come to become president. That is improving the outlook there for the US. Oil inventories this afternoon will have a big impact on the oil price. Certainly the volatility is elevated on a Wednesday afternoon with the EIA oil inventories. Look at that number of oil inventories build that we've had. Very slight decline that we saw a couple of 2-3 weeks ago. We're actually expected to see a decline on the crude stocks of 1.1 million barrels, and also with the distillates and gasoline stocks expected to also draw down. That should theoretically provide some support to the oil price, and the oil price has been climbing today again in front of that data. In terms of my charts today, we're looking at the Aussie dollar. Now, we had the Reserve Bank of Australia giving monetary policy update yesterday, kept rates on hold at 1.5%. However, it was rather downbeat on labour, on the prospects of the labour market and inflation, and that subsequently drove the market to form this big strong bear candle. Now that is pulled the Aussie below that 76 big figure pivot that we've basically been trading around for the past few months, really, and that is within this range between 75 figure and 77.50. You've got this sort of minor corrective downtrend channel that we've had on the Aussie for the past few weeks, and that sort of continues to move lower, and I think the selling into strength on those rallies is likely to be the outlook now. You look at the momentum indicators, they're looking increasingly corrective. The RSI is at the low 40s, stochastics falling away, MACD lines also falling away. I think this is sort of playing out a downtrend channel that would suggest selling into strength around that 76 point. That pivot line becomes resistance again. And what we've seen today is a bit of a sort of rally, or a technical rally, that's helped to unwind the momentum into the mid-50s on the RSI, falling over MACD lines back towards neutral. Stochastics again sort of beginning to roll over back towards this downtrend. That downtrend is around about where that 76 sort of figure support or pivot line comes in. So rally within that within that downtrend and back towards that pivot line, I think is a chance to sell. You've got a few resistance areas, so 76.25 towards 76.15 in the last couple of days, but generally speaking I think around 76 figure is your sort of sell area on the Aussie. Sort of looking for a retest of yesterday's low, likely to be seen at due course, 75.42, but then subsequently the lows around the 75 figure area that we've seen in the last few months. So I wish you good luck in your trading today, and I will speak to you later. Thank you.